Barrel rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Hello, I'm Professor Code and this is the Forex Super Model weekly review for Monday the 26th of the 4th to Friday the 30th of the 4th 2021. Basically we've written up the weekly flows here. We're going to start it as we write up the dailies to save time. But anyway, this is what's been happening over the relevant week, 26th to the 30th. Euro dollar then minus 74, so that means over that period the euro dollar as an FX pair lost minus 74 points or pips. Euro yen plus 87, euro pound minus 18, pound dollar minus 59, pound yen plus 138, and dollar yen also plus 138. And if you pump that into the flows, you get a negative opposed driver in the yen for the week at minus 363. Front and back door flows mainly going into the dollar at plus 271, into the pound at plus 97, and the euro was the negative rock at minus 5. Activity plus or minus 368. Right, so over the week then we had the yen negatively driving, with the opposing positive flows mainly going into the dollar, some into the pound, and the euro was pretty static at minus 5. Right, so we'll stop it there and write up the daily, so don't go away. Right, welcome back. We've written up the daily flows then. So Monday the 26th, we had a positive unopposed driver in the pound at plus 100, so no backdoor flows. The opposing negative flows were coming mainly out of the yen, minus 72, next out the euro, minus 23, and the dollar was the negative rock at minus 5. Activity plus or minus 100. Tuesday the 27th then, negative unopposed driver in the yen this time, minus 243, no backdoor flows. The opposing positive flows were mainly going into the pound at plus 116, the euro at plus 83, and the dollar was the positive rock at plus 44. Activity plus or minus 243. Wednesday, we had a positive opposed driver in the euro, plus 72. Front and backdoor flows this time, mainly coming out of the dollar at minus 65, out of the yen at minus 29, and the pound was the positive rock at plus 22. Activity plus or minus 94. Thursday the 29th then, an unopposed negative driver in the yen, so no backdoor flows. The opposing positive flows mainly going into the pound at plus 77, the euro at plus 22, and we had this joint situation of the rock and the mover in the dollar and the euro at plus 22 apiece. And the activity level was plus or minus 121. Friday then, last day of the week, 30th, we've got a positive opposed driver in the dollar, plus 274. Front and back door flows mainly coming out of the pound at 215, out of the euro at minus 157, and the yen was the positive rock at plus 98. Activity plus or minus 372. Right, we've rattled through those, rub those off, and we'll just start to do some analysis, so don't go away. Right, we're back then. So just to remind you then, over the week then, we've had the yen as the opposed negative driver at minus 363. So the yen has been weak and driving the market negatively. We've got the opposing positive flows have mainly been going into the dollar at plus 271, into the pound at plus 97, and the euro has been pretty static at minus 5 over the week. So basically we've had yen weakness, dollar, bit of dollars, quite a lot of dollar strength, and pound strength to a certain degree, and the euro has been in a state of dynamic static equilibrium. Right, so let's have a look at what's been happening with the asset classes then. So the US dollar index basically it broke. It came right off, and it's come back to 0.45 from the floor. The bulk of that was yesterday, Friday. So gold then, so we've got this situation where we've had a pump up in the dollar again, minor pump up. Gold had this double top, it sold off and it's now basically back at this support area, which is 0.33 from the floor. So gold is still pretty soft. Oil, if you remember, oil came off after the OPEC situation a couple of weeks ago. It's come back up, and it's just come back a little bit. It's 0.28 from the high, our modeled high. Right, so what have we got? Wall Street. Basically, Wall Street broke, and it's sort of moved sideways, like so, well above the break. The S&P had this double top, which it broke, and it's moved sideways and slightly down. The tech took an age to break. It's broken, but it's still come back to this resistance break area there. US 10-year, which is the bonds, and the bunds, which is the European end of it. This is the price. Remember, we've got this sort of situation. The price came back a little bit yesterday. Came up, so the yields have come off slightly. And it's 0.33 from the floor, and the bund likewise has this look about it. It's 0.2 from the floor, but really the most important thing is to bear in mind that the relative yield gap between the US 10-year and the bund. The price is relatively higher in the US 10-year. And therefore you're getting like a positive euro-dollar effect. Yields are weaker in the US than they are in Europe at the moment, relatively speaking. Right, so copper. Now, if you remember, copper had 1, 2, 3, 4, 5 pumps. It went back to the second pump. It went back to base camp, and it's basically messed around and then broke significantly. And where are we? It's come back a little bit. It's 0.25 from the high, from the most recent high. Now, US steel, which had this, it was sold off at the double top. It broke, and it's come back, and it's sitting about 0.4 from the high. So we've not had any particular move in US steel. Right, we'll stop it there and then just do the final bit of analysis. Right, welcome back again. Right, okay, so Tuesday next week we've got the 4th, we've got the Australian rates decision, and we've got the New Zealand employment change data. So for our trades that's quite significant. The GDP report for Canada basically showed that they're within 2.2% of the pre-pandemic levels in terms of GDP. So arguably Canada is come right back, and yet it's not being reflected in the FX flows at the moment. Right. So if you look at our positions, we're short the dollar against the euro, the pound, and the AUD, and we're short the NZD against the euro, the pound, the CAD, and the AUD. Right, now the NZD came off yesterday, and arguably is still being perceived as this risk on, risk off currency, but actually that is way behind the curve. Just dropped the chalk. Now the NZD, I agree with you, is that in parts, but the NZD complex relative to the euro, the pound, and the AUD has already been there, done it, and got the t-shirt. So what's going to, when we're shorting the NZD, we're not actually using it as a risk-off transmission. We're saying that the NZD relatively will be softer than the euro, the pound, the CAD and the AUD going forward as we hit this full risk-on scenario, which we believe we will in second quarter, which we've sort of started. So that's where the confusion is that basically you've got this idea that the NZD will do well in risk-on because of its link with China and the commodities and all the rest of it, and yet we're shorting it for that very fact because because of that situation. Now our trades are we're about minus 300 points now, so in our terms we're sort of knocking on the door break even because we're heavily scaled into all these positions. So we're just looking, the platform's steadying up now, the swings are becoming less violent, which is what we would expect as we start to build a longer term position. Our position has been very difficult to build because ultimately because of this very transmission, the market is perceiving the NZD as the go-to commodity currency, or has been, but you'll find that changes in the next week or so. We believe that will be the case, and you're going to end up with the NZD being soft in terms of the euro, the pound, the CAD and the AUD, because it will have a relative be relatively less strong than these currencies, and the dollar, don't be fooled, the dollar's going to be soft going forward, and the yen is likely to be soft via the equity transmission. So you're left with the euro and the pound soaking up the opposing positive flows, and therefore that ties in with the euro and the pound trades here. You're going to get secondary flows into those complexes, and the AUD and the CAD. The CAD is very underrated, as we've said, and basically later on today we're going to put out the latest data review, data cycle review, which is basically our version of the economic calendar. So for the period, so try and catch that. So basically that's what's our scenario is. It's been very gutty. We're now sort of knocking on the door break even again, but we're much bigger. So hope that was useful. Thank you for watching.